Hello and welcome to this session. This is Professor Farhat. In this session we will discuss Complementary User Entity Controls, known as CUECs. In the prior session we discussed something similar, very similar sounding name, and that's Complementary Subservice Organization Controls. So I'm going to give you the big picture first before we dive into the Complementary User Entity Controls. Let's go back to the original example that we have. We have Farhat Lectures. Farhat Lectures is an online education company. They need to have an IT department or an IT support division. They don't have their own. What they do is they hire Best IT Support. Best IT Support is a service organization. It provides services to Farhat Lectures. So Best IT Support becomes, in a sense, part of Farhat Lectures. Why? Because it's part of the entity's internal control. It's part of our system. It's integrated with our information system. Now, Best IT Support will have to issue maybe a SOC 1 or a SOC 2 report. Now, within Best IT Support, they might use their own services, outside services. So Best IT Support might hire Best HR Services to handle their HR services, and they might hire a cloud service company called Best Cloud Service Company to handle their cloud services. So notice Best HR and Best Cloud Services are part of the Best IT Support Service, which is a service organization. Now, when a service organization relies on another subservice organization to perform some of its services, like the HR and the cloud services, the service auditor must clarify the relationship in that report. And this is what we looked at in the prior session. They will either use the carve-out method or the inclusive method. Now, and we called these services Complementary Subservice Organization Controls. Simply put, the controls that Best HR Services and Best Cloud Services are controlled, that they must be effectively managed by the subservice organization to support the service organization ability to achieve its control. So those controls are called CSOCs or CSOCs. So notice we have CSOCs, where the subservice organization is relying on the service organization is relying on the subservice organization. That's great. Now, who determines what those CSOCs are? Management. Management will determine if the controls needed at Best HR and Best Cloud Services are needed for us to do our job. So this is what we learned in the prior session. In this session, we're going to look at Complementary User Entity Control. Let's go back to Farhat Lecture. Farhat Lecture is the user entity. Now, Best IT Support provides services to Farhat Lectures. Best IT Support might require certain controls by the user entity. And they would say, our controls cannot be successfully achieved unless Farhat Lectures perform certain controls. Simply put, Complementary User Entity are controlled that the user organization, which is Farhat Lectures, the client of the service organization, must have in place, must implement for service organization control to effectively achieve their intended objectives. So Best IT Support might tell Farhat Lectures, look, you need to have certain controls in place. You need to implement certain controls. Otherwise, our controls are not as effective, or they cannot achieve those objectives unless those controls are in place and properly implemented. And this is what we will need to discuss in this session, those Complementary User Entity Control. Here's a quick shortcut. I want to remind you to differentiate between the difference between the CSOCs and the CUECs. How do you differentiate them? CSOCs is when you are relying on other organization. Other organization means subservice organization. In a CUEC, you are relying on your customer. So the IT service, when they're dealing with CUECs, they are relying on a customer. Farhat Lecture is a customer of theirs. When you are dealing with a CSOCs, you are relying on a vendor, because Best HR Services and Best Cloud Services are vendors. This is in a CUEC, you are relying on your customer. So keep that in mind. Hopefully it will help you keep the difference between, and it could be a question about this, and we'll discuss this later on, the difference between the two. But let's go ahead and get started in examining or diving a little bit deeper into the complementary user entity controls. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Just a summary real quick before we dive into the CUECs is the summary about the carve-out method when we are using CSOCs. When the carve-out method is used, the service organization description does not exclude controls at the subservice organization. What would the service company do then? They would rely on certain controls at the subservice to meet its objective. Remember, we expect them to be working properly, and they would rely by monitoring, and the service auditor does not audit the subservice controls. It's outside the scope of the audit. So this is what happened in a carve-out CSOCs. So the information helps the stakeholder understand the boundaries of the auditor's review and independencies between the service and the subservice organization. In an inclusive method, the inclusive method means the service organization system description and the auditor's review encompass all relevant control, including those at the subservice. Well, here we are including them in our system description. They are within the scope of the audit. And these methods provide anyone interested in the audit, the stakeholders, with a complete understanding of the overall control environment affecting the service organization operation, acknowledging the integral role that the subservice organization plays in maintaining effective control. So under the inclusive method, they are basically integrated together. One cannot be understood without the other. In the carve-out method, we mention them, but we say they are not within the scope, and we are relying on their internal control. As long as they're working as expected, we should be able to achieve our control. Now let's move on to complementary user entity control. And now we are looking at the relationship between the service organization and its customer. So complementary user entity control. So in the context of a SOC 1 or a SOC 2, complementary user entity control refer to controls that the user entities, Farhat Lectures, now this is the user entity, must have in place, must implement for the best payroll services control to be working properly. So these the control that we have, work in conjunction with those of the service organization. So we need the control at Farhat Lectures, the control at the payroll, to make sure that the objectives or the commitment outlined in the service organization description are met. They both have to work together. So our control at Farhat Lectures are essential for the combined operation of both the service organization and the user entity's control to effectively meet the stated objective or requirement. Now, keep in mind, it's management responsibility of the service organization to ensure that their system description explicitly mention these CUECs. So what they would do, they will have at Best Payroll Services, they will have to explicitly state it's their responsibility to mention those complementary user entity. And this description must include a clear statement that it's the responsibility of the user's entity to implement these complementary controls. And they will state in the report, and we would look at a report in a separate recording, that our control can only work to a point. Then the user entity control will have to be working properly, and they will explain it, and they will explain how they are integrated. And if everything is good, they are working properly. Everything is working properly. So what are some examples of CUECs? Well, security monitoring. For example, user entity Farhat Lectures need to actively monitor their security system to detect and respond to threat, which support the security measures provided by the user organization. So let's assume they are providing us with cloud services or some sort of a data provider. Well, guess what? We have to keep our environment secure. So we have to, on our end, keep security monitoring. So they will tell you, look, yes, we are doing our utmost job to achieve those control objectives, but if you don't provide security, our controls are not effective. Or you have to provide encrypted financial data. Now, while the service organization might handle data processing, the user entity will be responsible for ensuring that the data is encrypted. So we can secure the data, but you have to encrypt the data when it's stored in your servers or when it's transmitted. So that's your job. That's complementary. If it's not working properly, that's part of the complementary user entity controls. If you don't have encryption, well, our services will not, or our controls will not work properly. You have to have physical access control, and that's an obvious one. User entities must need to implement physical security controls to protect data or system that interface with our service organization. Simply put, if you keep the door unlocked and a hacker or a threat actor could access the information system, then guess what? You are exposing us. For our control to work properly, you have to have physical access controls. You have to have proper authorization policies. User entity are often responsible for managing access control and ensuring that only authorized, trained people can access the sensitive information or system because they know how to use this information. Otherwise, you will expose us as the service entity. And those are some common examples of queues. So simply put, we're asking our customer to work with us in order for the control to be met, in order for the control objectives to be achieved. So those are what the queues, the complementary user entity control. Now let me tell you something. How would that sound if you hired a company and the company kept asking you to maintain certain controls? You may not be very happy with this, or you might be annoyed. It's like, why did I hire you if you always keep asking me about to do this or to do that? So what service organization would do most of the time, try to be self-sufficient in assurance. What does that mean? It means service organization usually restrict their commitment and scope of their system requirement to activities and process that are entirely within their control. It means that we're gonna try to avoid relying on your controls. We are self-sufficient, and this strategic limitation means they focus only on delivering aspect that they can directly manage. So the service organization, most of the time, they will try to avoid, unless it's absolutely necessary, involving the queues. Why? Because you're going to keep nagging the customer, and customers don't like to be nagged. If I ask you to maintain my IT system, don't bother me. The reason I gave it to you because I don't have the expertise, I don't have the time, I'm relying on you. So service organization try to be independent from queues. By doing so, the service organization reduce the need for additional controls from the user entity, known as the complementary user entity controls. Once again, because you are annoying, in quote, you are annoying the customer. That's one way. Another way, maybe you don't trust what they're doing. Therefore, you have to do extra work to make sure the controls are achieved without relying on them. They don't have the sufficient knowledge or the competency, or you just don't want to annoy the customer. So self-sufficiency in assurance, this setup allows the service organization to provide reasonable assurance on its own that it has met its service commitment or system requirement without asking for those queues. So the queues are out of the report. And this assurance is crucial for building trust with clients, and it demonstrates that the organization can uphold its part of the service delivery without external dependencies. Think about a company that they're talking to do service to two service organizations. One service organization assures them that we can take care of everything. The other one says, well, we can take care of everything, but you have to do your end of the job. Well, if you don't know what you're doing, you may go with the first one, say, I don't want to worry about anything. If they are responsible for everything, I will prefer that one. So that's why service organization will try to be self-sufficiency in assurance. Let's take a look at a practical example to see how the queues work, kind of to give you an idea. So let's assume a service organization offer cloud-based services to various user entities, including healthcare providers that manage sensitive patient data. Now, a complementary user entity control within the service organization report could specify that the user entity are responsible for maintaining their own system by regularly updating and applying security patches for their software. This is to ensure when this healthcare provider connect to the cloud services, they are not introducing vulnerabilities that could compromise the security of the shared infrastructure. So this is an example, and I believe that's a reasonable request. Look, you have to keep your software up to date. Otherwise, you're going to expose yourself and expose us. So the service organization might also offer guidance or tools to assist the user entities in this process to further safeguard the overall system integrity. So the best is for the service organization to help their client to basically be on their side in making sure their software is constantly updated. Why? Because they don't want them to be exposed, and by the client exposing themselves, they could expose the service organization as well. So this is a classic example of a QC. In a SOC 1 report, inclusion of the QCs in the system description. The system description in SOC 1 report should clearly list any QCs necessary for meeting the service organization control objective. This is to make sure we have clarity about the user's entity control and the overall control framework. And it's recommended to include a statement where applicable that the service organization ability to achieve its control objective depend on the proper design and functioning of these QCs at the user entity. And this highlights the interdependency nature of the control between the service organization and the user entity. And we would look at a report. So once you mention the Qs, you want to put them in the description, and you want to explain that the relationship between the service and the user organization are interdependent. Our controls work only if your controls work properly as well. In a SOC 2 report, similar to SOC 1, SOC 2 report should detail the relevant Qs and explicitly state that user entities are responsible for implementing and maintaining those controls. And the report should clarify that the auditor's engagement did not assess the design, suitability, or operating effectiveness of those users' entity. Now, we say that they are working, but we should also state that we did not assess their design, suitability, or operating effectiveness. This is important for setting expectation regarding the scope of the audit. Interaction of the Qs with the service organization. Also, we need to mention this. The language in a SOC 2 report should explain how the Qs interact with the controls of the service organization, emphasizing the role in the comprehensive control strategy. Now, you can talk about how they are interacting, but you cannot say you audit them. You did not say that they're operating effectively. That you cannot say. You can explain how they are implemented. How they are implemented in a sense, how they work together. Simply put, both a SOC 1 and a SOC 2 report necessitate a clear understanding of the Qs, ensuring that all parties involved are aware of their responsibilities in maintaining effective control environment. And this approach helps in managing what? Risk and maintaining compliance across all entities. Let's just look at the key differences between the complementary subservice organization control and the complementary user entity controls. Now, I'm going to try to kind of summarize this, but hopefully this summary will kind of clarify it. Direction of dependency. In a CSOCs represent a dependency on a vendor or a third-party provider. It's a downstream. So if this is the service entity, Best Payroll Services is the service entity. What's happening? The Best Cloud Service is the subservice organization. It's a downstream. They're relying on them. Whereas the complementary user entity control represent dependency of the client or customer. So the client is Farhat Lectures and you're relying on the client. So SOCs and CUECs. And in the middle, we have the service organization. Also, CSOCs are located and need to be implemented within the operational sphere of the subservice organization. So the SOC are at the subservice organization. The Qs are implemented by the customer, the user entity. And obviously, kind of once you know the direction, who's responsible for what, but this is to clarify the point. Let's take a look at this multiple choice question by farhatlectures.com. Which scenario best illustrates the need for a Qs, complementary user entity controls? Let's start with D. A service organization designs all controls to be entirely independent of the user entity action. Well, let me tell you this. This is the opposite of the complementary user entity control. If the service organization is stating there's no need, I am relying on my own control entirely, I'm independent of the user entity, then there's no need for the complementary user entity. I can take out D. D is an easy elimination. A subservice organization agreed to follow specific operational controls. Once I read subservice organization, use complementary user entity control has nothing to do with the subservice organization. Remember, here's how it works. We have the service org, we have the customer, which is called the user entity, and the relationship between the service organization and the user entity are the queues. Then we have the service organization and we have the sub-service org. The relationship between the service organization and the sub-service org, which is their vendor is where the CSOCs are involved, the complementary sub-service organization. Therefore, here they're asking us about the complementary user entity, which is the relationship between the service organization and the user entity. As soon as you say subservice organization, you take C out. So notice we eliminated two answer choices, 50% down, real quick. Now the answer is between A and B. A financial processing service insists on implementing its own controls without the client involvement. If I look at B, it's very similar to D. A service organization design all its control independent of the user entity. Basically, they want to be independent. By process of elimination, A is the correct answer. A cloud service provider requires that its client perform regular vulnerability scans on their system to maintain security standard. And that's a reasonable request. Please keep your system up to date. Avoid any vulnerabilities. Avoid any weaknesses, because you might expose yourself and as a result, expose us, and as a result, our controls will not work properly. So A is best illustrating the complementary user entity controls. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you whether you're studying for your CPA exam, especially if you're studying for your CPA exam, information systems and control. Invest in yourself. Good luck. Study hard. Farhat Lectures is always here to help.